Thank you, Mr. Chairman. Mr. Secretary, thank you for taking the time to be here. Sir, traditionally, the FHA has had its mission to be able to provide access to credit-worthy, low and moderate income and first-time borrowers and to play a counter-cyclical role in the market in times of credit contraction. Is that still the perimeters that you believe are the mission of the FHA?
That is still the heart of our mission, playing a counter-cyclical role and affording opportunity for hardworking, responsible Americans to be able to access credit, purchase a home.
Okay. Right now, the FHA has roughly 50% of the market share that is in place in the whole mortgage market, insurance market. Do you think that's too high?
Congressman, I would just say that we fulfill our mission and we play a counter-cyclical role. We've seen our market share from the beginning of the housing crisis go up, and we've started to see it come back down. So we see that FHA is playing its counter-cyclical role. We welcome private capital into the market, and I mentioned earlier that is something that we recognize of importance.
To step back a little bit, when you just defined what the mission of the Federal Home Administration is 50% of the market in that low-income, underserved area, counter-cyclical area, 50% of the whole market? Does it meet that?
And now has started to decline as private actors have come back with more force into the market.
I'll come back to this, but since you bring up the counter-cyclical portion of this, you'd indicated that you've had two of the most profitable years, so the market's stabilized, but yet you're trying to get a bigger share of the market by lowering rates. Is that correct?
What we're trying to accomplish by lowering these premiums is to strike a strong balance.
But you're 50% plus now.
Our goal is to strike a strong balance between continuing to improve the health of the fund and also afford opportunity for the folks that FHA has served.
So that
for 80
50%,
years.
that is all low-income, underserved markets is what you're telling us.
Well,
50% of the market right now.
It's the folks that FHA has historically served. It's folks who are, some of them are lower income, first-time home buyers.
Just by basis for a little bit of reflection here, the overall market share has fluctuated from as little as 3% in the 2000s to more than 30% of new mortgage purchases during the crisis. Normally, it's in the 10 to 15% range, so you're already well above that.
We did see, I agree with you that we saw the market share increase. We've also seen it start to come back down. That is the countercyclical role that FHA plays. I believe that there's a strong value.
So again, has the market normalized pretty much? You just said you had two of the most profitable years in your history.
That is correct, 2013.
So why are you trying to get more business by lowering rates?
Getting more business.
You're at 0.41% capitalization.
Again, getting more business was not the primary driver of our decision.
Is that going to happen? Are you going to take a bigger share than 50% now of the market?
The primary drivers of our decision have been ensuring that we have a strong and growing mutual mortgage insurance fund. And also, we think that everyday hardworking Americans deserve a shot to own a home in the United States, and that FHA has played a unique role in making that happen. And we're committed to it continuing
in the normalized market that you say we're now in, what would be the proper size of the FHA?
I won't get into hypotheticals about the market, except to say that I believe that it is very clear that we have produced results in terms of improving the Mutual Mortgage Insurance Fund, and we're committed to working with the committee to continue to strengthen the fund.
And you've indicated that you're obviously comfortable with lowering the rates. And just final question here in the waning moments that we have here. How big or is too big for the FHA in terms of the overall market?
We're going to continue to serve the unique market that we have served for 80 years now. And this premium reduction helps ensure that we continue to strengthen the fund, but at the same time, we make a home loan a little bit more affordable to everyday hardworking Americans.
Thanks, sir.
Time of the gentleman has expired. The chair now